Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 24th of January. It's been a pretty difficult start to the year, and this week has been no exception. Quite apart from the overhanging concerns around the Federal Reserve likely to announce next week that it's going to accelerate its monetary tightening process. That's both in terms of winding down its balance sheet, but also raising interest rates, the first hike of which we could see as early as March, and potentially another two before the year is out. Quite apart from that, we've also been hanging our hats somewhat on the current reporting season in the States, and there have been a couple of disappointments there. Indeed, more recently this week, we had some severe markdowns in shares of Netflix and indeed Peloton, both of which were disappointing in terms of growth, both of which had more than 20% declines. And indeed, the NASDAQ as a whole, the tech index in the States, quite apart from those disappointments, has also been the subject of rotation out of growth stocks such as tech into value stocks as the year has progressed. In fact, the NASDAQ is now what they say in correction territory. In other words, more than 10% down from its recent high, which was achieved in November. So in the year to date, we're now in a situation whereby the Dow Jones is down by 4.5%, the S&P 500 by 5.9%, the Nasdaq by 9.5%, with the FTSE 100 still just about managing to keep its head above water, and it's added 1.6% in the year to date. Looking ahead to next week, in the UK, we've got half-year numbers from drinks maker Diageo. This is the global behemoth which brews anything from Guinness to Johnny Walker. Now, those premium products have been good for the business. It's got its own pricing power and the ability to pass costs on to customers. The shares are up about 29% over the last year or so. A couple of things to look out for: how it's dealing with the current round of cost inflation and indeed supply chain problems, and how its main markets in the US in particular, but also the emerging middle class in China, how they're faring. In terms of other companies reporting next week, with the pressure we've just mentioned on the NASDAQ, probably worth looking over the pond, because we've got updates from Apple and Microsoft. Certainly in terms of Apple, despite the recent plummeting in its share price, the shares are still up 19% over the last year. Normal things to look out for here, most importantly perhaps iPhone sales. They account for almost half of the business coming in to Apple. Also, of course, its services division, and indeed things like its App Store. But by geography and by product, it's been faring fairly well. So those are obviously things to look out for in the update, and in an effort by Apple to lift the investor mood. Similarly, Microsoft shares up 35% over the last year again, despite that recent dip that was seen across all of the technology index. Its software and cloud computing businesses, of course, are likely to show further growth. That's certainly something which will be front and center in terms of the actual trading numbers. And of course, any update on its massive $70 billion bid from Activision Blizzard, the maker of Call of Duty, amongst other things, signalling Microsoft's real entry into the gaming market. Any update on that particular development will also be an interesting one. Thank you for watching. Have a great week.